top programs for first-time home buyers, hacks that you couldn't find on the market, guys, for mortgages. Not just buying homes or real estate. Today I have a mortgage broker, and she will be telling you, her name is Nita, so she will be telling you about all the programs that you need to know that can save you thousands of dollars a year and also get you some tax rebates and possibly get you a better deal for a mortgage that you might have not known about. Something that mortgage brokers don't want to even reveal it unless you're working with them directly. But we are a good Christian channel here, so we share that kind of information for free. That's Nito and Igor, guys. What's up and welcome back to this YouTube channel.
It's your girl Nito here.
Let's begin. The first program is FHSA.
It is First Home Savings Account. Now there is a maximum limit on contribution every single year per individual. That's up to 8,000, and you can go up to 40,000. So if you want to do that every 5 consecutive years, you are able to do that. And do check it with your accountants. If you have not reached that threshold of 8,000, it may be able to be used in the next year and it's carried forward. So that's a very good way to start on how exactly you can get tax rebates. If you are utilizing the entire amount of 40,000, then next year when it comes to tax filing, let's say you're making 100,000, you are exempt of that 40,000 that you used for your first home savings account to buy your first home. One of the amazing benefits for first-time home buyers.
Basically, you can accumulate up to $8,000 per year, up to $40,000, what you're saying, in total. If you opened an FHSA account, let's say in December last year, your contribution room would be $16,000 by this year, because now it's the next year is $8,000. It accumulates to $16,000.
Correct.
And also it's per family member as well.
If you have a spouse, if you have a partner, that person can contribute the same amount. It's 8,000 per individual per year, which is the maximum contribution limit.
$40,000 in total, over the entire amount, and $80,000 for 2 people.
And the most important question people are asking me is that how long do they have to have this amount in their account? Is it 30 days, 60 days? Well, it's not really mentioned on the government's website what exactly is the timeline. I would recommend at least a minimum of 20 to 30 business days, just so that they do have a record in their bank account or with your amount. So in case CRA asks, you can provide a statement from that bank, this statement saying that yes, I used to have a FHSA in this particular bank and here's a statement, just to be on the safer side if in case they do not give you those tax rebates the next year.
And also, best idea is to consult your tax professional to know the exact legislation around it. But what Nito is saying, the benefit of this entire thing is that you can actually use that money tax-free from your incomes. You get rebate, you get tax refunds from that money, from your personal taxes. That's the way government helps you save up enough money for the down payment. And the biggest advantage to this, actually, I know someone who had way more money than you're allowed to have on a FHSA account, and they used it because they actually generated money from stocks. So they had it. This video is not sponsored by Questrade or anything, guys. They used Questrade. They bought and sold stocks. They actually almost doubled the entire amount on their account, and they used all that money tax-free to buy their home. How did they do that, guys? Those guys are brilliant in that way. It's good, but you can actually use that money to generate interest and still use that money, just like your for example, tax-free savings account for yourself. You can, like I have one Questrade. Don't ask me how my stocks are doing with Trump and everything, but guys, that this can be done. Now, next one. Just got ambushed by an army of birds, guys. Check this footage out. Nito was feeding them. First, we didn't have any seeds on us, so we tried to give them an empty hand, and the birds are like, what the hell? You can't publish video without any being useful. We put some seeds in there, and it was kind of cool, guys. Beautiful living in Canada. Now, let's talk about the next one. You said it's RRSP. She knows more about it, and she's going to tell you how you can use RRSP. And that's a question I get a lot. They come to me and they ask me, hey, can I use my RRSP to buy my first home, and how does it work? And I'm like, ask Nito, I don't know.
The easy answer is that whatever RRSP you have in whichever bank, it shouldn't be locked. If it is locked, you will have to get the information and ask them when exactly can you redeem that, if you're able to redeem that, because I know a lot of employees, a lot of clients who have their RRSP benefits with their employer. It's kind of a group RRSP and you're not able to withdraw that. And also, if you are not a Canadian citizen or a permanent resident, you are not able to take benefit of this program as a first-time home buyer. Definitely the first question would be, is it locked? If it's locked, when exactly can you redeem that? And secondly, do you get all the benefits? Are you eligible as an RRSP holder, as a first-time home buyer, to get that tax rebate if you have that RRSP? The next thing is that when you are having RRSP account, in order to withdraw that funds, the bank will give you another form which is called as Homebuyers plan. You will have to fill out that form. You will have to specify what exactly you are withdrawing that money for, how much is the down payment, what exactly, how much is the purchase price. You might have to even provide the contract agreement, the signed purchase agreement that you have, either with a seller, the purchase agreement that you sign, or even with the builder. You might have to give all those documents to the bank in order to withdraw that. And be it a RRSP home buyers plan or be it the first home savings account, just make sure that you have at least a minimum of 5 business days when you do this transaction, because sometimes the funds that is taken out from the bank account may take time in order to transfer to where exactly you want that. And then you have to take that funds and all the funds for down payment essentially and convert it into a bank draft and then go for your lawyer's appointment.
So what's the benefit, Nito, of using that RRSP for all of this thing?
Tax benefit.
But do you have to repay it? That's what the biggest question people ask me.
Oh, the repayment, yes, because RRSP is retirement savings account. You will essentially have to pay it back. Initially it was 3 years, now they have extended to 5 years. The repayment starts after 5 years. That's the benefit of utilizing your first home savings account. You do not have to pay it back. RRSP, you will have to pay it back.
I think that's the negative part about it. But the best part about it is you can actually use it to buy your home, right, Nito? So I hope that I answered the RRSP question. And once again, guys, I want to tell you one thing about mortgages and Realtors. She's a mortgage broker. Is the OC Clear Trust Mortgages. I'm a real estate agent with XP Realty, guys. And I want to tell you, we are basically real estate professionals. And these things that we are talking about, RRSP, FHSA, and stuff like that, those are accounting stuff. There are professionals in every field. People who are more qualified in this are people who actually deal directly with that, like an accountant, chartered accountant, and legal questions. Who are more qualified to answer the recontract questions, those are the lawyers. But of course, you will have a purchase agreement if you're buying a property, because they will want to see where you're using that money for. Are you actually buying a property, or you just want to pull out the money for RRSP? That's why the bank might ask you. All right, let's go to the next one. Now, first time home buyers tax credit. Nito, what is that?
This is a tax credit. It's in the name itself that you get the next year once you buy a home. Let's say this year you bought a home in 2025. When you file your taxes next year in 2026, you will get that rebate. This rebate tax credit can vary depending on your family income, anywhere from $2,500 up to $10,000. So it also depends on your family income. There is no requirement on it. It's just that next year when you fill your taxes, if there is a column in your tax document, they will just ask you, are you a first-time home buyer? Blah, 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 all those questions. And there you go, you get your tax rebate.
And I think it's, if you're married, you can use double of that. 2 people can use it or
Most
not?
likely it's 1 per family, but it depends who exactly is on the title, who exactly is not on the title. If you're someone who's not on the title, and then you might not be able to claim it. But yeah, that's a tax person question.
Yes. Guys, essentially government is trying to incentivize people to buy real estate and make things easier.
The next benefit is 30-year amortization. This is all across the internet. Actually, I feel it's one of the most beneficial and most important benefit that is given to first-time homebuyers now, because the housing affordability, because housing prices have gone up and they want more first-time homebuyers to enter the market. This is one of the things that the current government has made in place. 30-year amortization actually lowers down your monthly payment. You can get lower monthly payment. Initially, it used to be 25 years. How that works is that you will able to get 30 years even with, let's say, minimum down payment of 5%. Earlier, it used to be you should put 20%, then they will be extending to 30 years if you want lower down your monthly payment. But right now, even for 5% with minimum down payment or 10% or 15%, as you can do that 30-year amortization to get a lower monthly payment. And of course, people are saying that, oh, for 30 years, am I going to be locked in 30 years? No, it doesn't work like that. You get the benefit of doing prepayment to your mortgage. So either you pay a lump sum, either you double down your monthly payment. Those are the prepayment privileges that you get when you take a mortgage. So make sure you read the contract terms and agreements before you sign the contract.
Yes, and if you don't know something, you ask me to.
But come to me only before signing the contract.
Yes. It's there is one thing that happens to me too. And a lot of times people come and they're like, "Oh, I signed this with this bank, or this credit union, or what? What do I do now?" Well, it should have showed up sooner, I would say, so before you sign it, because honestly, that's why there are mortgage brokers for that, who can guide you for that. But I want to tell you guys one thing about this entire 30-year amortization. Similar to car payments, you go to a car dealership and they're like, well, if you don't finance this car for 5 years and you do it for 8 years, your monthly payments would go down. You can afford a bigger car. Similar thing with the houses, actually, guys. But the difference between houses and cars, a car is a depreciating asset, and a house maintains the value or can even become an investment for you, and you could take advantage of that. Biggest thing about what you need to say is 5%. The biggest changes, it's an insured mortgage, because in the past you were allowed to do that, but it has to be uninsured mortgage, and for you to get an uninsured mortgage you need to put 20% down. But for insured mortgages, minimum is 5% down. Yeah. That's the biggest change
right now.
For that.
Right now, even if you are a second-time home buyer, let's say, and you are buying a pre-construction property or a brand new property, you can still get that 30 years even with less than 20%. We just recently did for our client, and she was so happy to learn to get that first-time home buyers. But even though she is not a first-time home buyer, but the reason why she got it was that she's buying a new construction property.
And that's actually, guys, I think I even know who you're talking about. That's exactly, guys. It's an amazing opportunity. Now you do pay more interest, and if you're 60 years old, maybe 30-year amortization would look a little bit old, too much for you. That's understandable too. But you know what? If I was 60, I would take 120-year amortization because I wouldn't care. But anyways, guys, it's actually, a lot of people would say, how much interest over the years would the bank get from me and everything? But in reality, it actually makes housing more affordable for you, because you can buy a better home. For example, if you start doing the math, you start thinking pragmatically. But if you start thinking from a first-time home buyer perspective, you have a family, kids growing up, you want a bigger property, and those lower monthly payments do allow you to buy a bigger property for your family. For example, you were going to buy a condo, but you have 5 kids, and you can live in 1-bedroom condo unless you're in Mumbai. I'm just making fun of Neetu. But anyways, fun of Neetu. She was born in Mumbai, right, Neetu? And there is a lot of people in Mumbai, so I'm just making fun of that fact, you guys. And anyways, you can actually buy a bigger property, and it's beneficial like that. Yes, the bank makes more money, but at least you can buy something with lesser monthly payments in that sense. And over the long period of time, guys, by the time you pay off the property that I recently sold, not recently, like last year, it was probably 6 months ago or more, in Millrise, it was purchased like 26 years ago or something like that, 1990 something, and they purchased it for like $180,000, and I sold it without any renovations, and it's not in great condition or anything, last summer for $670. $670, I think. I think we got $670 or $655. No, that was another one, $655. That was another guy in the same community. It was this guy, but I won't mention names, guys, in this video. That was $670. I sold 2 properties in that community. That was with lots of bedrooms house, 2-story. Anyways, guys, next Now guys, I want to tell you one rebate that Nito haven't mentioned in this video. It's actually GST HST rebate for pre-construction new homes for affordable housing program, guys. Now I want to make this video shorter, so we're not going to go into details on this, but I'll let you know, guys, if you contact Nito and you are searching for a mortgage, she's going to tell you how that works as well, or where you can find out more information about it as well, guys. And we will leave some links for you in the description of this video. Guys, I want to thank Nito for showing up on this channel more openly now, making more videos and educating myself and you guys on mortgages, because mortgages is something that honestly a lot of people don't know the importance of knowing mortgages. And I realized on the industry now, I know it's going to be shocking for Nito, but I'll tell Nito how other mortgage brokers operate. They just say, okay, this is the lender, this is the best rate, you have to sign here, here's the commitment letter, done. And then they don't go into details. But because they don't go into details, and a lot of people complain to me about those past experiences with other mortgage brokers, and especially banks, where they just mislead you by saying that, hey, B lenders are standing for bad lenders, so you don't go with us because we are good ones. You know, like jokes like that. But jokes aside, people do that behind the closed doors. You can hear a lot of things going on like that. The most important part is the knowledge and information. You got a lot of information from this video, and probably more information that you got from your last mortgage broker. You know where to find Nito. Now, Nito, you have to say anything?
Well, apart from the rebates and tax credits that we mentioned in this video, there are many other rebates like that, and that is according to your profile, your application. There, you can get multi-generational tax credit. There is, Igor mentioned, HST GST credit. There is a lot of other credits that's going to be applicable for you. Even there is eco-friendly CMHC program.
I was going to say that.
There are a lot of programs that is going to be case-by-case basis, according to your profile, according to your application, according to the house that you want to buy or you're trying to get. Feel free to contact us to know how exactly you can take advantage of such programs.
Any real estate questions, guys, feel free to reach out and ask in the comments down below, guys, because we'll just make a video and cover that, because this information is going to be available to you. Just ask us questions. Share this video with people who are buying properties right now who didn't know about such programs, and we'll see you next video. Thanks for watching.
Bye for now.
Bye-bye.